6:15, time now for business news, and we say good Monday morning to Mike Eppel. Check in on how his weekend was. Pretty good.
It was okay. Watched a lot of sports.
Yeah.
a lot of sports. Yeah, the hockey day in Canada on Saturday from beautiful Owen Sound was awesome. And then the Leafs did what the Leafs do. And the Bills kind of did what the Bills do, unfortunately. So, yeah.
For the Bills, there's always next year. We'll see.
That's always the case, isn't it?
Yeah.
There's always next year. So that was pretty much the weekend in a nutshell.
All right. Well, what is predictable as well, Wednesday, we know that the Bank of Canada will be hiking the interest rate once again. Question is, will they be doing it again after that?
Well, that's the talk, at least, Tammie, that we'll see one more interest rate increase in this tightening cycle, which would be the 8th since March of last year. Come Wednesday, although there are quite a few prognosticators and analysts are saying that maybe the Bank of Canada this week might want to sit it out, sit this one out, simply because they have raised interest rates 7 times, which is, cratered the housing market, and it hasn't yet shown up in the longer range economic statistics. But that's the whole issue with monetary policy. It takes time to go through the economy, and then you start to see the effects of the previous rate tightenings. And so we're going to see an economic downturn. We just haven't maybe seen it yet. So under that circumstance, they're going to likely raise rates 25 basis points on Wednesday morning. But we are expecting, again, inflation starting to trend lower, and some of the economic stats will start to follow suit. At least that is the theory. But nevertheless, look, if you've got a variable rate mortgage or a home equity line of credit and things like that, unfortunately, come Thursday morning, we could see higher borrowing costs once again.
Yeah, these dreaded hikes for a lot of people who have borrowed that are just, waiting for this to all come to an end. For sure.
And it comes back to the regret because, we were told interest rates were going to stay low for long, borrow at that time. But then they started coming up a lot faster than maybe a lot of people expected, and now we're paying the bills on them.
And here we are. All right, to tech stocks next. Last Friday, pretty good day for those stocks.
Yeah, and it was, unfortunately, in some cases, for all the wrong reasons. Google and the parent company Alphabet had a big day announcing 12,000 job cuts. Up goes the stock. We see that so many times where companies cut jobs and the market responds favorably because, in theory, they're reducing costs and getting costs in line. But 55,000 job cuts now is the headcount in the tech sector. When you factor in previous announcements from the likes of Microsoft and others, we're hearing Spotify is going to cut more jobs this week. We've got earnings due this week from the likes of Tesla and Microsoft and Intel and Johnson & Johnson and Boeing, and I think 12 companies in the Dow Industrial Average. Of the 30 companies that make up the Dow will be reporting earnings this week. So it has the potential to be an extremely volatile week just because of the earnings and the forward guidance. That's what we're going to be looking for from these corporate announcements about what the expectation is for the economy, earnings, and the labor market, and what it all means for the equity trade, which, again, this morning's holding kind of steady by the looks of things.
All right. Just out of time, but quickly, quiet quitting. We're quitting that term now. We're done with that. Yeah.
Yeah, that was so 2022, the whole idea of doing your job and only doing your job. But now rage applying. You're so frustrated with your job. You're just sending out blanket job applications to whatever it may be, even if it's not in your particular field of expertise or what have you, just because you're so upset with your current job. You're just sitting there on your computer all day and applying to all sorts of jobs that are open. That's going to be interesting. If the labor market actually slows down, that will be a thing that'll be quickly in a thing of the past.
Yeah, this rage applying.
All right. There you go. There's
Get ready to hear that. Yeah, we'll hear that more and more this year. All right, Mike. Thanks so much for that. We'll chat with you tomorrow.
Thank you.